Good afternoon, traders. Welcome to another live trading session with CWG Markets. And today we're going to continue as we look at our delayed February NFP live trading. And before we continue, just to bring your attention to the fact that any opinion, news, research, prices, analysis, or information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you're looking for investment advice, then be sure to contact a regulated financial advisor. Now, for those of you who haven't met me, my name is Dumelo. I'm a senior market analyst at CWG Markets, and in this session, I'll be taking you through how I trade NFP live and the approach I take to look for opportunities to capitalize on in the market. To keep up to date with CWG Markets, as well as daily market tips and analysis, be sure to subscribe to this Telegram channel, CWG Markets Global, where you'll receive daily market news and outlooks, educational trading content, webinar access such as today, as well as event updates and official promotions and announcement. To do so, make sure you scan the QR code that you see on the screen or simply subscribe to this Telegram channel where this live stream is being hosted. So the agenda for today is as follows. What we're going to do firstly is we're going to have a look at our economic calendar to see what high impact news are being released today. Then after that, I'm going to analyze the markets, look for opportunities to capitalize on during this trading session. And then what I'll do is after looking for trades to capitalize on, I will explain the strategical approach which I implemented in the market to look for the trades that I'm going to be taking today. And that will be the agenda for today. So moving along to the first part of the session, which is looking at our economic calendar. So as we can see today, Feb 11, in about just under 2 hours, we have high impact news on USD, specifically average hourly earnings, month on month, non-farm employment change, as well as unemployment rate. Non-farm employment change and unemployment rate. These are the high impact news for today. So what is this? What is NFP? So what I'll do is that I'll break it down for you in a little bit more detail, just so you have a fundamental understanding of what it is. And having a fundamental understanding of what it is will then give you a better base as to understand exactly what news we're trading, in which currencies it's going to affect, as well as which currency pairs that I'm going to be looking at trading because of the fact. So first thing we'll start with is our USD average hourly earnings month on month. This is an economic indicator that measures the monthly percentage change in average hourly earnings for all employees in the US, excluding the farming industry. This is a critical indicator of the wage growth and labor market conditions in the US, which tends to have a significant effect on the value of the US dollar, and also tends to lead to high volatility in the market for dollar-related assets. Next, we have our USD non-farm employment change, which is NFP. And this is an economic indicator that measures the net change in the total non-farm employment change in the US over a specific period. And it is a critical indicator and one of the most closely watched indicators in the market and in the US of A, and it provides insight into the trends of the employment and labor market conditions in the United States, which tends to have a significant direct influence on the value of the US dollar, and with high probability tends to lead to high volatility in the market. So this is why this economic indicator is very important. And then lastly, we have our USD unemployment rate, which is an indicator that measures the percentage of the labor force in the US that is unemployed and actively seeking employment in the United States. And this indicator provides an indicator of the health of the US labor market and the overall economic conditions, which tend to have a significant influence on the value of the US dollar and tends to lead to a high probability of high volatility in the market for USD related currency pairs. So this high probability for high volatility in the market for US related pairs is important because this tends to lead to opportunities that one can capitalize on as a trader during these high impact news events. So the goal in the session for me is to look for opportunities that I can capitalize on in the event that there is going to be high volatility in the market, so that I can catch high volatile moves, make a lot of pips in a low amount of time, and catch these volatile moves and be on the right side of these moves to capitalize on them as well. So that's going to be the goal of the session, is to position myself in the market where I can catch these high volatile moves that tend to happen when NFP is being released. Now, for those of you that are going to be trading today, as well as trading non-farm payroll, just to bring your attention to the fact that CWG Markets does have a 100% welcome bonus, which allows you to enjoy 100% bonus on every deposit on your trading account up to $1,000, allowing you to double your funds, have more margin, double your equity, as well as have the opportunity to put yourself in a position to grow your account in the most efficient way possible with this 100% welcome bonus. So because we have NFP being released today, and that's going to be the focus of the day, the symbol for the day in terms of our watch list are going to be all the USD related currency pairs, which include AUD USD Aussie dollar, Euro dollar, GBP USD, Kiwi dollar, dollar CAD, dollar Swiss, dollar yen, gold, which is XAU USD, WTI crude oil, which is US oil, S&P 500, which is US 500, NASDAQ, which is UT 100, and the Dow Jones, which is US 30. This will be the currency pair watch list for today to hopefully position myself to catch these high probable high volatile moves from the NFP. Now, the strategical approach, the strategy that I'm going to be using is a strategy that consists of identifying high interest levels, drawing the high interest levels, analyzing the markets at these key levels, and looking for confirmation of entry signals at these key levels. And this strategy is suitable for traders that are news event traders, day traders, intraday traders that look for intraday trading opportunities, as well as swing traders that look for intraday low risk, high reward opportunities as well. And the best time to use the strategy that I'm going to be implementing is when trading high impact news, as well as if you are a day trader looking for intraday trading opportunities as well. This strategy is a 5-step strategy, which consists of identifying our high interest levels, drawing those high interest levels, analyzing the price action at these key levels, looking for confirmation of entry at those levels, and then placing the trade using one of the 3 options of trade placing opportunities. This is a 5-step strategy, which I will explain to you in a little bit more detail after I've analyzed the markets, looked for trades, and taken the trades. So the focus of today will be mostly for looking for trading opportunities, and then explanation of the strategy will be done after that as well. So this is a 5-step strategy breakdown. Again, if we move along over to the charts. Again, the symbols of focus are going to be AUD USD, Euro USD, GBP USD, NZD USD, USD CAD, USD CHF, USD JPY, USD ZAR, gold, XAU USD, US oil, which is WTI crude oil, US 500, which is S&P 500, US 30, which is the Dow Jones, and UT 100, which is NASDAQ. These will be the currency pairs of focus for the session today. So if you're going to be following along with me on your charts as well, I'll give you a moment to open up the charts and set up your charts with all the USD related symbols. So I'll give you about a minute to do so. All right, perfect. So what I'm going to do now is I'm going to step straight into the analysis so we can get our charts set up in the meantime. So the first one I'm going to start with here is AUD USD. So AUD USD, this will be the first currency pair of focus for today. So AUD USD. Let me just fix my mic here. All right, perfect. So AUD USD. I'm on the 15-minute time frame. I'm going to switch over to the 4-hour time frame to identify my potential supply and demand levels. Starting with the first level I see is all the way down here, which is a potential level of demand. And then supply, it seems I'll need to go a bit back in time, and that's going to need me to zoom all the way out here. Okay, it seems I'll need to go all the way to January 2023 or February 2023, where I see a level over here. So this is the first one, potential level here, February the 2nd, 600-hour candle where price pushed down with high volume. And then we've got, for our potential demand, we've got February the 10th, 2026, 1600-hour candle where price pushed up with high volatility over here. So that's the 4-hour. Now I'm going to switch to M15 to draw the levels, starting with February 10th, 2026, and using our volume as clues. So this one is no longer relevant. Same as this one. This one here is still relevant. I see another potential clue here. If I move along, I do see another potential clue all the way down here. And another one here as well. Right, so starting with the first one here, if I zoom in a bit. Okay, so February the 10th, that's the one level I see. There we go. That's the one level. Then there's another level which is directly below it, pretty much the same level. And then if we go next, I do see another potential clue here, which is in the same level as well. Okay, there's a few that I missed here. Yeah, so there's another one that I missed, which is this one over here. So it's this one and this one over here, which may be a zone if I take a deeper look. So there's this one here, and then this one over here as well. So this is the zone. Then this one below over here. Then the other ones, this one no longer relevant. So I'll delete that one. And then this one below as well, which is also part of the zone. So again, when it comes to the zones, what I'll do is I'll just add in a rectangle here. This is done just so it's not confusing when looking at the actual levels. So we'll change this one here, expand it out, as well as this one as well. So now we've got the zones. So if we look here, we've got February the 9th, 100 candle, 1230, 1500, and 1515. And Feb the 10th, we have 1445 and 1530 candle. All levels of demand where price pushed up with high volume. Now what we're going to move along to is the supply level, which is all the way in Feb 2023. So we'll see here on the 15-minute time frame if we can get to Feb 2023, which it seems we cannot. You can only get to November 2023. So I'm going to move to our time frame higher and see on the 30-minute time frame, can I get to Feb 2023? And the answer is, well, let's see. Since the chart is moving here, answer is no, since I can only get to October. So then I'll switch back to the 1 hour and see how far I can go with the 1 hour. And the 1 hour only takes me to August. So that means I'll have to stick to the 4-hour time frame for this level. And if I zoom in here on the 4-hour time frame, I can use two levels here. There's this one and this one. The first one here seems price already broke through that level, so I'm not going to use that one. But I can use this level here. Okay, so I'll have to use this 4-hour level here, which is from February the 2nd, the 1200-hour candle, where price pushed down with high volume. Then if I want to go a little bit higher, see if there's any other clues here. There ain't any other clues, so I will just focus on this level for now. And see if I go a little bit higher and zoom out a bit more, if there's any other levels above on the 4-hour. No, there isn't. So for now, we'll just focus on this level from February 2023 as the level of supply. And then if I switch back to M15, go to where we are at right now. Okay, so basically what we have here is we've got supply level number 1 over here, demand zone 1, demand zone 2, and demand zone 3 below. If price breaks above supply number 1, we might need to use support and resistance to find the next potential resistance level. Okay, so other than that, these are going to be the levels of focus for today on AUD USD Aussie dollar. Okay, so that's the first one, AUD USD. Perfect. Moving along. I'm going to go to Euro USD. I'm going to switch from M15 to the 4-hour time frame. Identify potential supply and demand levels, starting with the first level I see here, which could be a potential level of demand, not too sure. If not, we'll use not this one, but this one over here for another potential level of demand where price pushed up with high volume. Then for supply, if I zoom in a bit more here, I see the next potential level of supply sitting somewhere here around January or Feb or January 30th 8 a.m. candle, where price pushed down with high volume. So it'll be the potential supply. Then demand, we've got Feb the 9th 1200 hour candle where price pushed up with high volume, and Feb the 10th 1600 hour candle, which is not clear as yet whether there's a potential demand or supply from this level. But now what we'll do is I'll switch over to M15 starting with the 10th of Feb and start looking for clues. The first one I see is this spike over here, which is no longer relevant, as well as this one over here, which is also no longer relevant. Then another level here, also not relevant anymore. And it seems, yeah, price was just moving sideways here. There is a clue here that I see, and that one's no longer relevant as well. So nothing from Feb the 10th. So if I move over along to Feb 9, there's a clue here, and this clue here, no longer relevant anymore. Another one here, also not relevant. A spike over here, which this spike is still relevant. So we'll add this one here. That's the first level I see. Then there's one right next to it over here, down below. Then a few more clues here, which I'll just add in now. And then we'll break down further. So here's this one, and this one, which is a zone. And then this one over here. And this one. There is more below, but we'll just focus on these few for now. And what I'll do is add in the rectangle again, just to clear the confusion. So all these levels here are levels of demand, or where price pushed up with high volume. Starting with Feb the 9th here, we've got 800 hour, 930, 1230, 100, 1500, and 1515, all levels of demand where price pushed up with high volume. And we've got this one over here as well, which is another zone that I missed out on. Okay, so that is our zones of demand. Next is supply. So supply, we'll need to switch all the way over to January 30th. And again, we're going to look for areas where price pushed down with high volume. And there are a few clues here. There's a few here which here, these aren't relevant anymore. Same as this one here. This one is still relevant. This one here, no longer relevant. What I do want to see though is there could be, these ones could still be relevant. So what I'm going to do is I'm going to go back. Over here and see if these ones below are still relevant. So I'll add these two here because I am seeing something. You want to see if these ones are still relevant. These are still in the same zone. So if I go back and see, okay, these ones, yeah, these ones still relevant. Price has been consolidating at these zones, so I'll keep this in for now. Okay, and then continue with the one higher here, which is the next relevant level. Then let's see if there's any other clues here. No other clues. Well, yeah, there's a clue over here, and that's the next level. I'll just focus on those for now. And these two here is more just like a little zone. Okay. And again, draw this in. Over here. Okay. Right. So now we have here January 30th. We've got 215, 1345, 1500, and 1530 candle. All levels of supply where price pushed down with high volume. So now if we go back and look at the current price, okay, I'll zoom in a bit here. So we've got supply zone 1, supply number 2, demand zone 1, and demand zone 2, and demand number 3 all the way below. Okay, and this is Euro USD already reacting off this level over here. So these are going to be the levels of focus for the session today. Try zoom in here. It's a little bit, yeah, we'll just use this for now. Okay, there we go. Actually, I'll just zoom out. Right. So that is Euro USD. And these are going to be the levels of focus for the session today. Okay. Moving along, we're going to go to GBP USD. Go from M15 to H4 to identify potential supply and demand levels. So here's a potential level of supply where price pushed on with high volume. May not be relevant anymore, so we might need another level of supply, which will be this level here, the next potential level of supply, and then demand for the level of demand all the way over here. So supply, Feb 2nd, 1600 hour candle where price pushed down with high volume. Demand, Feb 9, 1200 hour candle where price pushed up with high volume. And potential supply here, Feb the 10th, 1600 hour candle where price pushed down with high volume. This is on the 4 hour. Switching to M15, starting with Feb the 10th, looking for some clues, starting with this one down here, no longer relevant. This one here, not relevant anymore. This one here, not relevant anymore. So there isn't a level of relevance anymore here on the 10th. So delete that one. And we move along to Feb the 9th for demand. And a few clues here. Starting with this one over here. If we look at this one, not relevant anymore. Look at this one, not relevant. As well as this one, no longer relevant. So we continue going down. This one here, this one is still relevant. And therefore, these ones below may still be relevant as well. So that's the first level I see. Next one is this one here. Next one is this one, which is a little bit of a zone there. The next one is this one. and this one here. Okay, that's the zone, and there are a few more clues here, which this one's still in the same level, so I'll leave that one out for now and just focus on these ones. And I'll make these here the zone. Okay. There we go. So Feb the 9th, we have 1345, 1330, 1300, 1000, 930 candles, or level of demand where price pushed up with high volume. And now for supply, we'll go all the way back now to February the 4th to look for potential levels of supply for GBP USD, where there is this one here, relevant level, this one here, no longer relevant, this one not relevant anymore. Again, if we go back and see here, yep, not relevant anymore. So back to February the 4th. Next one is this one up here, which is still relevant. This one here, no longer relevant. So this is what we'll do. That's the first level there. Second level here, which is a zone. I'll move this up here and identify the next potential supply. But first we'll add in this here and this here to draw in the zone. Okay, so this is Feb the 4th, 1515 and 1600 hour candle. Both levels of supply where price pushed down with high volume. Now that we're here, I want to see if there's another potential supply here in case price breaks above the current zone we have. So I'm going to move over along to January 30th, and I see this one here, which is still relevant, and this one here, pretty much another zone as well, and this one here. So there we go. That's the first one. That's the second one, and that's the third one. Okay, let's see if there's other ones to focus on. Yeah, those are the ones of focus for now. Okay, and if price breaks above, we'll draw in new levels. So we'll just put this in here again to not confuse. So January 30th, 1600 hour candle, 1700 hour, and 1745, all levels of supply where price pushed down with high volume. So now if we zoom out here, the current price action we have, okay, let me just do this. We have supply zone 1, supply zone 2, supply number 3, demand 1, 2, demand zone number 3, and demand number 4. These will be the levels of focus for GBP USD today. Okay, moving along, we've got NZD USD. Switching from M15 to the 4-hour. Identifying potential levels of supply and demand, starting with the first level here, which could be a potential demand level here, where price consolidated before pushing up. If not, the next potential demand is this level over here, and then supply will be this level over here. So supply, we've got January 29, 1600-hour candle, where price pushed down with high volume. We've got Feb the 9th, 8 a.m. candle, where price pushed up with high volume, and a potential level here on Feb the 10th, 1600-hour candle, which we need to look at a little bit more. So we switch from H4 to the 15-minute time frame, starting with Feb 10th, looking for clues. So there is a clue over here, which is relevant. This one here. Okay, this one here, no longer relevant. Same as this one here, this one over here, no longer relevant anymore. This one here, also no longer relevant. So skip that one for now. Move over to Feb 9th, where there's a level here, which is no longer relevant. There's this one here, which is still relevant here. So add this one in. Then another one just below, over there. And this one over here below, which is still relevant. And this one over here. Okay, so February 9th, we have 1515 candle, 1500-hour, 1345, and 1230. All levels of demand, where price pushed up with high volume. And these two over here is a zone. There we go. So that's Feb the 9th. And now moving along to the supply side, we need to jump all the way back to Feb or January 29th and look for areas where price pushed down with high volume. But before I go to January 29th, let me start with January 30th and see if there are any other clues. So January 30th, there is one clue here where price pushed down with high volume. And this is January 30th, 045 candle. And now moving along to January 29th, see if these levels are still relevant, not relevant anymore. This one here, still relevant, where price pushed down with high volume. Looks like it's giving a little bit of a zone there. See if there's any other clues. No other clues for January 29th. So the only level we have here is 1630 candle, where price pushed down with high volume. And then giving us a zone between Jan 29 and Jan 30, where price pushed down with high volume. Right, so add this in, not to be confused. So there we go. So now if we look here, zoom out a bit, this is NZD USD. We've got let me just see something. Go back. Okay, these are all the levels. Okay, that's fine. So now looking at what we have here, NZD USD, we've got supply zone number 1. Let's do this. Supply zone number 1. Okay. Demand zone 1, demand number 2, demand number 3. Now, since we do have a bit of time, what I will do is I'm going to go back to the 4-hour time frame and see where the next potential supply is if the current zone of supply gets broken. So back to the 4-hour, I want to see NZD USD where the next potential supply could be. And it looks like it's all the way in June 30th, 2025. No, July the 1st, 2025, 1600-hour candle where price pushed down with high volume. So what I'll do, switch to M15 and see if I can go to July the 1st, 2025, which I can. So I'll zoom out over here, see if there's any clues here. Starting with 1st July the 2nd, see if there's any clues where price pushed down with high volume. There's a clue here, which is no longer relevant. This clue here, which is no longer relevant. I see this clue over here, which is still relevant. This one over here, no longer relevant. So delete this one, add this one in here. And this is July the 2nd, 800-hour candle. Now going back to July the 1st, see if there's any clues here. Okay, not relevant anymore. This clue here is still relevant. And this is a level where price pushed down with high volume. And no other new levels. So those will be the levels to focus on for July the 1st, which is 1500-hour candle where price pushed down with high volume. So now if we go back to NZD USD, zoom out again, we've got supply 1 over here, supply zone 1, supply 2 and supply 3, demand zone 1, demand 2 and demand 3. So we'll just do this, and these will be the levels to focus on for NZD USD for the session today. Next is USD CAD. So USD CAD, switch from M15 to the 4-hour. Identify potential supply and demand levels. See a potential supply over here. Potential demand. Here, which doesn't seem to be relevant anymore. Next one is somewhere around here. So January 29, 1600-hour candle. Got a potential level where price pushed up with high volume. And Feb the 10th, 1600-hour candle for a potential level where price pushed down with high volume. This is on the 4-hour time frame, so we'll switch to M15, starting with Feb the 10th. See if there's any other clues here. So we do have a clue here, still relevant. This one over here, no longer relevant. not relevant, not relevant. This one here still relevant. Same with this one up here. And then this one here, no longer relevant. So here's the first one, next one, and this one here, which seems to be a zone. Which we'll draw in a rectangle, not to confuse. So Feb the 10th, we have 2345, 1530, and 1445 candle, all levels of supply, where price pushed down with high volume. Now moving along to the demand side of things, we go to January 29th, but first we go to January 30th and see if there's any clues here. Okay, January 30. See if we have any clues. There is a little clue here. A little spike down here where price pushed up with high volume. So it's the first clue. Then January 29. Okay, no other clues here. So what that means is I will move this down here and see if I go back and see if there's any clues to go identify another demand by switching back to the 4-hour here, 4-hour chart. And I'm going to have to scroll all the way back in time. This is USD CAD. See if I find another demand level, which looks like it's all the way here around 2024, October the 2nd. Specifically, the 1600-hour candle where price pushed up with high volume. So now that I found it on the 4-hour, I'm going to switch back to M15, go to October, which I can see here, and join the potential levels, which there is a level here, which is still relevant. Another one here, no longer relevant. No other relevant level here. So this is October 2nd, 1745 candle, where price pushed up with high volume. Then what I'm going to do is I'll move this one slightly down and see if I zoom out a bit. If there's any other potential clues, which I see a clue here. This one no longer relevant, but this one still is. Right over here, no longer relevant. This one here, not relevant anymore. This one here, no longer relevant. This one down here, this one here, still relevant. So I'll add this one in. That's going to be September 26th. And the one slightly above it, which is more like a zone, as you can see there. So basically, just focus on this for now. So Feb 26, from here and here, this is the zone of demand where price pushed up with high volume. 1500 hour and 1530 candle, all levels of demand where price pushed up with high volume. So now if I'll go back in time, so the current price action, and have a look. I have this one over here, supply 1, supply zone number 2, which I'll just focus on that for now. And then demand, I've got demand 1, demand 2, and demand zone number 3 all the way at the bottom over there. So these will be the levels of focus for USD CAD for the session today. Okay, USD CAD. Next will be USD CHF. Switch from M15 to the 4 hour over there. And then identify potential supply and demand levels, starting with this level here, which is a potential demand. And this level over here could be a potential supply that is still relevant. So supply, we've got Feb the 9th, 1600 hour candle, where price pushed down with high volume, and Feb the 10th, 1600 hour candle, where price pushed up with high volume. This is on the 4 hour. So switch to M15. Identify the levels to draw now. So got a level here, which was a clue, no longer relevant. This level here, still relevant. Yeah. Then this one below, no longer relevant. This one over here, still relevant. Okay, and then that's all for Feb the 10th. So Feb the 10th, we have 1630, 1745 candle, all levels of demand where price pushed up with high volume. Now for supply, I'm going to scroll all the way here to Feb the 9th. See if there's any clues here. So Feb the 9th, there's one right here exactly. These ones no longer relevant. This one here still relevant. This one here still relevant. Then we have a few here which are also still relevant, and I'll just focus on those for now. So just zoom in a little bit there and have a look. So remove this line, add this one in here. There's this one here, this one here, this one there, and this one over here, and this one over here, which is literally in the same area. So I'll leave that on not for now and add that in over there. So okay, add in the rectangle, and now we've got a zone. So basically Feb the 9th, we've got 1600, 1515, 1500, 1015, 930, and 800 hour candle, all levels of supply with price pushed down with high volume. So now if we have a look here on dollar Swiss, we've got demand number 1 here, demand number 2 below, supply number 1 or supply zone number 1, supply 2, 3, and 4 above. And these will be the levels of focus for dollar Swiss for the session today. Now, moving along, we've got USD JPY, dollar yen. Switch to the 4 hour chart. Identify potential supply and demand levels, a potential supply over here, and a potential demand all the way down here. So we've got Feb, January 29, 1600 hour candle, where price pushed up with high volume for demand, and Feb the 10th 1600-hour candle, where price pushed down with high volume for supply. Switch to the 15-minute chart. Starting on Feb 10, we have potential level here, which is no longer relevant. This level over here, also not relevant anymore. This one up here, this one is relevant. Let's just look at this one again. Yeah, this one not relevant anymore. Then this one next to it, which is still relevant. It's a little zone there. Then I see another two here and here, which these ones are still relevant, which will add this one in here. And this one over here. Okay, so these ones just add the rectangle for the zone. So basically, we have Feb the 10th, 15:30, 14:45, 3:45, and 2:45 hour candles, all levels of supply where price pushed down with high volume. Now for demand, scroll all the way back up to January 29th, and we're looking here for areas where price pushed up with high volume. This clue no longer relevant. There's no longer relevant clues here. Moving along to January 28th. This one here is still relevant. This clue here no longer relevant. This clue here relevant. This one over here relevant. Not relevant anymore. And this one over here, I'll have a look. So this is the first one. Relevant level here. Another one up here. This one over here, which is more like a zone. And then this one down here, which this one is no longer relevant. So next potential level is all the way down here, which is no longer relevant. So delete this one and this one. We'll just focus on these levels that we have here for now. And if anything changes, we'll identify new potential levels later in the session. Okay, so January 28, 10:45, 12:45, and 1700-hour candle, all levels of demand where price pushed up with high volume. So now if we have a look here, we have demand level number 1, demand zone number 2 below, supply zone 1, supply 2, and supply 3 above. So those are going to be the levels of focus for the session today on USD JPY. USD JPY. Okay. Moving along, we're going to go to gold, which is XAU-USD. Switch from N15 to the 4-hour, identify potential levels. So could be a potential demand level here, and supply is potential level all the way up here. Okay, so potential supply, January 30th, 1 a.m. candle where price pushed down with high volume, and potential demand, Feb the 10th, 1700-hour candle where price pushed up with high volume for demand. Now, drilling down to M15, looking for clues, starting with the first one here, which is, no, not this one here, which is still relevant. This one here, also still relevant. This one here, not relevant. This one, not relevant anymore. And those are all the levels for Feb the 10th. So add this one in, add this one in. So basically what we have here is 2015 and 2315 hour candles with price pushed up with high volume. And then for supply, we just scroll all the way back up to January 29th or January the 30th and see if we have any clues here, which we have a clue over here, which is still relevant. This one over here, no longer relevant. And this one up here, still relevant. And let me see. We'll go to the day before and see this potential level here, which is still relevant. So January 30th is this level here. And this one over here, which is a zone. And then this one over here, January 29th. So if I add this one in and this one in, then I can use this to draw the rectangle where January 30th, we've got 1030 and 415 candle, and January 29th, we've got 1700-hour candle, all levels of supply, where price pushed down with high volume. Now, if we go back and have a look here, I'll zoom out a bit. So it's a little bit big here, so I'll just delete the rectangle so that it's not confusing. So basically, gold, if I zoom in here a bit, right, we have supply 1 over here and supply 2 above, and then we've got demand 1 and demand 2 below over there. And these will be the levels of focus for gold today in today's session. That's XAU-USD gold. Moving along, we've got WTI crude oil. Move to the 4-hour time frame. We have a potential level of demand. Could be demand here, and then potential supply is all the way up here. So supply, January 30th, 1700-hour candle, where price pushed down with high volume, and demand, we've got Feb the 2nd, 1700-hour candle, where it looks like price pushed up with high volume over here. Switch to M15. Look for clues to draw our levels. Starting with this first one here, which is still relevant. Same with this one and this one here. This one here, not relevant anymore, and no longer relevant anymore over there. So that's the first level, next level, and the next one, which is literally right there in the same zone. Okay. Okay. So Feb the 10th, 2015, 2115, and 2245, all levels of demand where price pushed up with high volume from these levels. Let me zoom in a bit here. Okay, there we go. So that is our demand areas. There are another clue here. I can see a big clue over here, which I'll just add in that one for now, just in case price breaks below. So this is Feb the 9th, 1630 candle, where price pushed up with high volume. Now for supply, we'll scroll all the way back to January the 30th. And again, we're looking for areas where price pushed down with high volume. Okay, so where are the clues here? I see this clue over here, which is still relevant. I see another one here, not relevant. This one, not relevant. Yeah, not relevant. Then this one here, not relevant anymore. But then this one over here, not relevant. This one here, still relevant. So start with this one, add in this one. And basically what we have is January the 30th, 1915 candle, January 29, 1700 hour candle, both levels of supply with price pushed down with high volume. Okay, so that's going to be our supply levels. So now, if I zoom out a bit and have a look here, we have supply number 1, supply number 2, demand number 1, demand zone number 2, and demand number 3 below. And this will be the levels of focus for US oil, WTI crude oil for today's session. Moving along to the next one, which is US 500, S&P 500. Go to the 4-hour chart, identify potential supply and demand levels. I see a potential supply here and potential demand just below. So demand is February the 9th, 1700 hour candle where price pushed up with high volume. Potential supply is February the 10th, 1700 hour candle where price pushed down with high volume. switch to M15, look for clues. This one here, not relevant anymore. This one here, still relevant. This one here, no longer relevant. So that's going to be it for the 10th. So that's a level here of supply. 2015 candle where price pushed down with high volume. Then for demand, there's this level over here and this level over here. So it's the first one, still relevant, and the second one here, also still relevant. So Feb the 9th, we've got 1630 candle and 1645 candle. Levels of demand where price pushed up with high volume. Now for the next potential supply, I'll do this. Go back to the 4-hour time frame and see if there's a new level I can potentially identify, which I can see here is going to be around February the 3rd, 1 a.m. candle where price pushed down with high volume. So I'm going to go back to M15, scroll to Feb the 3rd, and see if there's any clues here that I can find. And I do see a level here, which potentially is still relevant over there. And another level over here, where price pushed down with high volume. So what we're looking at here is Feb the 3rd, 1000 candle and 1630 candle, both levels of supply, where price pushed down with high volume. So now, perfect. So now, if I look over here, I've got supply number 1 here, supply number 2, and then demand number 1 below here, and demand number 2. These will be the levels of focus, or here's supply number 3 at the top here, but these will be the levels of focus for S&P 500 in today's session. Perfect. Next is US 30 Dow Jones. Go from M15 to the 4-hour. See a potential level of supply here and a potential level of demand here. Demand being Feb the 9th, 1700 candle where price pushed up with high volume, and supply Feb the 10th, 1700 candle where price pushed down with high volume. Go back to M15, look for clues, starting with this one over here, which is still relevant. Then there's another one here, also not relevant anymore. There's this one here, no longer relevant. And there's this level over here, not relevant. And I see this one over here and this one over here still relevant. Okay, so here's the first one. Next one here. This looks like a little zone. So put this one in and this one in. There we go. So Feb the 10th, we have 2245. 1500, 1445 candle. All levels of demand were price pushed up with high volume. Then Feb the 9th, there's another potential level here, which we can see seems like just below slightly. Feb the 9th, 1630 candle, a level of demand where price pushed up with high volume. Now for supply, we need to go back to 4 hour and see if there's another level above here. And it seems like there won't be another level. And the reason being is that we are in all-time high territory for the Dow Jones. So the highest point price reached was this point here, February the 10th. This is the high that price reached, the highest point. So basically no supply, no resistance. All we have is demand number 1, demand zone 2, and demand number 3 below. So these will be the levels of focus for US 30 Dow Jones in today's trading session. Perfect. Moving along to the last pair for today's trading session, which is NASDAQ UT100. So go from M15 to 4 hour, identify potential supply and potential demand. Demand being February the 9th, 1700 hour candle, where price pushed up with high volume, and supply February the 10th, 1700 hour candle, where price pushed down with high volume. So moving along here to M15. So M15, we need to identify potential clues, starting with Feb the 10th. We will use the high volume spike to identify potential levels, starting with this one over here, which is no longer relevant. This one over here, still relevant. This one here, not relevant anymore. Then those are all the levels we have here. So there we go. That's the first one, Feb the 10th, 2015 candle, where price pushed down with high volume. And if we move to Feb the 9th, there's a few clues here, starting with this one over here, which is still relevant. This one over here, also still relevant. And this one here and this one here, both still relevant. This one here and this one here, pretty much all a zone. So go from there to there. So Feb the 9th, we have 1230, 1400, 1630, and 1645 candle. All levels of demand where price pushed up with high volume. Now for the next potential supply, we'll need to go back to the 4-hour and see where the next potential supply level is. And it seems like it's all the way here around Feb the 3rd, 1700-hour candle, where price pushed down with high volume over there. So go back to 15-minute chart, scroll to Feb the 3rd, zoom out a bit, and have a look for any potential clues. But first, I'll start with Feb the 4th and see if there's any clues I see here, which I do see a clue all the way here. Feb the 4th, I'll zoom in a bit and draw this in. So Feb the 4th, 10 a.m. candle where price pushed down with high volume. Then we go to Feb the 3rd. The next clue is all the way up here. See this? Yeah. All the way up here. And another clue all the way up there. So these two over here. Both levels of supply where price pushed down with high volume. 1000 hour and 1630 candle for our level of supply. So now if we go back, this is NASDAQ. We have supply 1 here, supply 2, then supply 3 and 4 all the way at the top there. And then we've got demand 1 and demand zone number 2 below on UT 100, NASDAQ 100, which will be the levels of focus for the session today. Okay, so let's do a quick run through. So we've got NASDAQ UT 100 over here. We've got Aussie dollar, Euro dollar, GBP USD, NZD USD, USD CAD, dollar Swiss, dollar yen, gold, US oil, WTI crude oil, US 500, S&P 500, US 30 Dow Jones, and back to NASDAQ 100. These will be the levels we'll focus on for today's trading session. So we still have a bit of time. So what I'll do is, while we wait for the news gets released, I'm going to go back and quickly break down the 5-step strategy which I used to look for setups. Well, this will be the first 3 steps of the 5-step strategy, but I'll explain all 5 steps. So if we look here and see the 5-step process is step number 1, identify the levels. Step number 2, draw the levels. Step number 3, analyze the price action. Step 4, look for confirmation of entry. And step 5, place the trade. So step number 1 is to identify our most recent supply and demand levels on the 4-hour time frame using our forex volume to help us identify those potential areas where supply level is a high probability sell zone where price goes down, and a demand level is a high probability buy zone where price goes up. This is step number 1 on the 4-hour time frame. Then we go to step number 2 by drawing the levels on the 15-minute time frame, again using our forex volume to look for those clues with the high volume spikes, and we draw our supply and demand levels on the 15-minute time frame. This is step 2. Then step 3 is analyzing the price action on the 15-minute time frame, where we analyze the most recent price action to see what direction the retail trading is being induced and where the smart money levels are, and therefore analyzing which areas to either look for buying or selling opportunities. And we confirm that from step number 3 in step number 4 by confirming which supply or demand level price is currently testing, where if price is currently testing the supply level, then we'll look to sell from our supply level to the most recent demand level. But if price is currently testing our demand level, we buy from the most recent demand level up to the most recent supply level. This is step number 4, which is basically supply and demand 101, where we sell from supply down to demand, and we buy from demand up to supply. And this is step number 4 of the 4-step process, which is what we'll be doing just before the news gets released. Then once we've got the confirmation of entry, we then place the trade before the news is released using one of a combination of these 3 options, being the most recent fractal high or low. So most recent fractal high or low. So most recent fractal high or low. Or if the market is ranging, then we use the top of the range and the bottom of the range, the high and the low of the range, to set the entry or the stop loss. But if we're using a specific candlestick, then we'll use the high of the candlestick or the low of the candlestick to set the entry or the stop loss for our trade order. Okay, this is step number 5. And again, this is important because when we place our trades, always want to make sure that the risk is managed and you have a predetermined risk factor, which is you know how much of your account you're willing to lose per single trade. And knowing this will help when you enter and exit the market to calculate your trade risk, your points at risk, as well as the specific volume you need to use for every particular trade, which will then allow you to not lose more than your predetermined risk factor if price hits your stop loss. Okay, so that is the 5-step process. So if we go back to the chart here, and see, starting with S&P 500, NASDAQ, clearly we can see with NASDAQ, in terms of our analysis, is price is currently in no man's land. So since it's in no man's land, we need to wait for price to either push up to test the supply level, where we look for selling opportunities, or push down to test the demand level, where we look for potential buying opportunities. But for now, since it's in no man's land, there's no confirmation of entry as yet. AUD USD. So Aussie dollar also currently in no man's land, where again need to wait for price to either push up, test the supply level to look for selling opportunities, or push all the way down to the demand level where we look for potential buying opportunities. But the most high probability setup right now is if price can push up to the supply level and look for selling opportunities over there. But for now, no trade for now. Okay. Next is Euro USD, which is currently testing or reacting off our supply zone over here. So the supply zone, what I want to do first is, let me zoom in a bit here and fix this. Okay, there we go. Fix that. Okay, now if we go back, have a look, we can see price already has reacted off our supply level and is currently in no man's land, where again, high probability setup now is, let me zoom out here. Yeah, zoom out a bit there. Let me do this. Let me do this properly. Need to zoom in a little bit more here so we can see what's going on. Okay. Right, that's a bit better now. Okay, do that. Then with this one, okay, there we go. Again, this is just so there's no confusion. Okay, so we've got price currently in there we go. So price currently in no man's land, where we've got supply zone number 1, which price is coming off right now. Supply number 2, and then we've got demand zone number 1 all the way at the bottom over here. But because price is currently in no man's land, let's do this so it's a bit easier to see. Okay, so we'll just do this. do this over here. Okay. So price is currently in no man's land. So the goal here is for either for price to push up, retest the supply level. If price pushes down before the news, then down to the demand level, we will look for potential buying opportunities. But for now, it's a no trade for now until we have clear indication from the price action as to which most relevant level price is currently going to be testing before the news gets released. So it's euro dollar. Next is GBP USD. So GBP USD currently in no man's land, where the high probability setup is if price pushes up to test our supply zone and then look for selling opportunities at the supply zone over there. But for now, no trade until there's clear indication from the price action. Next is NZD USD, which also is, if I zoom in a bit there, also currently in no man's land, but a higher probability setup is if price pushes up to retest this, to test the supply zone and then look for selling opportunities from there. But no trade for now since price is in no man's land. Next, we've got USD CAD, which currently USD CAD is testing our supply level over here. So this is giving a confirmation of entry to look for sell trades from our supply level over there. So that is going to be a sell opportunity to look for before the news gets released. This is USD CAD. We will sell from supply 1 down to demand number 1 below. USD CHF, paired USD CHF, currently reacting off our demand level over here. It's already started to push up. Price currently in no man's land. So the higher probability setup over here is, if I zoom out, I'll just go from the zoom out over there. So here's our supply levels. Let me do this rather. Okay, so we've got demand 1, supply number 1 over here on USD CHF, with price currently in no man's land. So for higher probability setup is for either price, if it continues to push up, to test the supply level, where I'll look for selling opportunities. But if price pulls back before the news, then look for buying opportunities at demand number 1 over there. But until then, it's a no trade for now until there's clearer indication from the price action. Next is USD JPY, which is currently bouncing off our demand level over there, giving us an opportunity to look for buying signals. We can see price bounced off with the most recent fractal high over here. So for me, if price can pull slightly back towards the most recent fractal high, then this will give it opportunity to catch the buy trade up to supply number 1 over there. So there's a potential to trade a buy trade on USD JPY. But again, we'll wait slightly before the news is released to confirm the trade order. Okay. So that's USD JPY. Gold is currently in no man's land, but a high probability setup is if price looks like it continues to push down and test the demand level, then look for buying opportunities over there. So this is gold, but for now, no trade. We'll keep an eye on this one before the news is released. Next, we've got crude oil, also still in no man's land, with price eyeing the supply level number 1 there. So for high probability setup, wait for price to test the supply number 1, and then look for selling opportunities over there. S&P 500, also in no man's land. So either wait for price to pull back up here, test the supply level before looking to sell down over there, or if price pushes down, wait for price to test the demand level and look for buying opportunities over there. But for now, no trade for now. Then US 30, currently testing our demand level. So this is giving an opportunity for a buy trade setup, which we'll keep an eye on just before the news is released, before entering this buy setup, where price is currently testing our demand level. Okay, so there is a buy trade setting up over there to keep an eye out for. And then we've already done NASDAQ. Okay, so what we'll need to do is we wait for 15 minutes before the news is released to confirm the trade orders. So basically, what I'll do here is I will set up a 10-minute timer, and then we can take a 10-minute break. So in the 10-minute break, we can then come back after the 10-minute break and continue from there. So let me set up a 10-minute timer. So just give me a second as I go to over here and quickly look for a 10-minute timer. Okay, so there we go. Let me copy this link. Then I'll add this in here. I'll delete this, then add in a video. All right, there we go. Perfect. So okay, so share the screen there. Then what we can do is we'll take a 10-minute break and then continue to look for trades in 10 minutes. So there we go. Add this in here. And then we'll catch up again in 10 minutes. All right, traders. So now that we're back and it's time to look at placing some trade orders, what we'll do is switch back to the charts. Start looking for orders to place. Okay, so we've got NASDAQ over here, still in no man's land. So that's still going to be a no trade for now. Aussie dollar still in no man's land. That's also still going to be a no trade for now. Same with euro dollar. No trade for now. GBP USD, no trade for now. NZD USD, no trade for now. USD CAD. Got supply number 2 here. I still see a potential trade here, which I will take. Sell stop order with stop loss at the fractal high above supply number 2 and the entry at the low of the candle over here, the current candle that's just closed. Looking at an entry around 1.3550 and stop loss 1.3580. Okay, so that's USD CAD. Next up, we have dollar Swiss, still in no man's land, so no trade for now. Dollar yen. What I will do is I'll get this trade order ready, but I'm not putting it in yet. So potential buy stop with stop loss at the fractal low below the demand level number 1, and entry at this fractal high, the fractal high over here. But since price is already pushed up, I'll just keep this in case. But for now, it's a no trade. That's USD JPY. So USD JPY entry at around 153.49 and stop loss at around 152.74. Gold also still in no man's land, no trade for now. US oil also in no man's land, no trade for now. S&P 500 still in no man's land, no trade for now. And US 30 giving a trade setup here with price testing the demand level with entry price most recent fractal high, stop loss the fractal low below the demand level, over here. So basically entry at around 50,298 and stop loss 50,169. US 30. And then we've got NASDAQ 100. Still in no man's land. Okay, so basically, the only potential orders we have here is dollar CAD, potentially dollar yen, and US 30. Those are the trades for now. Here, so we've got about 9 minutes till the news gets released. Those are the trades for now. But in the meantime, what I want to do is bring your attention to the fact that for any serious trader looking to start trading, that with a minimum deposit of just $10, you can get access to a high leverage multi-asset trading account with CWG Markets called the CWG Cent account, which makes professional trading more efficient with MetaTrader 5. This CWG Cent account gets you access to trading currencies, indices, commodities, stocks, as well as cryptocurrencies, giving you leverage up to 1:1000, as well as EA automation support. So just with a minimum deposit of $10, this gets you access to this account. If this is something you're interested in, scan the QR code that you see on the screen to apply for the CWG Cent account, as well as taking advantage of the 100% welcome bonus, which is enjoying a 100% deposit bonus on every deposit up to $1,000 on your trading account, allowing you to double your funds, double your equity, increase your margin, and grow your account in the most efficient way possible. So make sure you sign up for a Cent account, as well as take advantage of the welcome deposit bonus and get started trading with CWG Markets today. But back to the charts. Okay, markets mostly no man's land territory. You can see US oil is starting to set up there. Not yet. We need to wait for price to test the levels for higher probability setups. Perfect. So all we do now is just sit and wait. I'll keep an eye on dollar yen just in case. But now we just sit and wait for price to move and hit our levels before we start placing the trade orders. around about one. We see how the market is some trade orders. But for now, the trades that I have in are the ones I'm interested in for the session today. You need to keep a close eye on USD JPY, as may give potential setup. Again, the entry I'm looking at is 153.49, stop loss 152.74 for a potential buy stop order if price pushes back into this zone. Okay, that's moved anyway, so missed that one. Gold is pushing down. Okay, US 30 has triggered, so keep an eye on this one and keep an eye on your profits. If you're happy with any of your profits, then be sure to manage your trades accordingly. NASDAQ is pushing up into the supply area, so let me delete these over here so you can have a clearer eye. Aussie dollar is pushed already, euro dollar, so missed that one. GBP dollar as well. USD CAD did not trigger, so this order, since it's no longer relevant, can delete that one. Might need to update it later. USD CHF is pushed into the supply area. Okay, gold is in our demand area, so this is giving us a potential buy opportunity to get ready for. So we'll wait for this candle to close and then look for final trades. Same with S&P 500 now, testing the supply. So delete this and this one. Keep out on this one. US 30 is still fine. So basically, only one trade triggered here, running in a bit of profit. Now we just wait for the current candle to close, as it looks like it's starting to set up some opportunities here, where now Aussie dollar is pushing down into the demand level, where we could be looking to buy. Same with euro dollar, but this one, there's no confirmation of entry as yet. GBP USD and Kiwi dollar. Okay, dollar CAD, what we can do is look for the next potential supply area. So I'm going to go back to the 4-hour time frame and see the next supply is somewhere here around Feb the 9th, 1600-hour candle. So go to M15, go to Feb the 9th, see where the next potential levels are. There's this one here. Zoom out a bit. There's this one over here. And this one over here, which looks like a zone. Okay, so Feb the 9th, 1600-hour candle, 930, 800-hour candle, where price pushed down with a high volume. And then I'll just add this in. Okay, so now if we go back and look, you can see price tested supply number 2 over there. So this is a new area to look for selling opportunities for supply number 3. Okay, there we go. Now again, we need for so it's plan number 1 over there. Just what will is wait for the candle to close, which will be in about 9 minutes, and then look for final trades before moving along. Okay, so we'll just keep an eye on this until the candle closes. All right, so let's do another run through. Have a look here. So it looks like UT100 Nasdaq is setting up. Aussie dollar looks like it's starting to reverse from this level. Euro dollar still pushing into our demand zone here, as well as GBP USD starting a pullback from the demand zone below. So it looks like the market is starting to reverse now and could set up some potential trade opportunities, as well as USD CAD over here. So in just about 2 minutes, we'll start looking at placing trade orders here. Oh, dollar yen pushed down already. Missed that one, but we'll keep an eye on this one because there's still maybe a potential buy setup there. Gold as well. So it looks like a potential for some reversals happening in the market. So we'll give this one 2 more minutes. Okay, USD JPY is pushing down a bit there. So, but it's still very volatile. Yeah, this one I'll actually take because it's in the area here, but this one will need to be at market order since, oh, actually can place a pending order there. No, it needs to be an at market order with the same stop loss 152.40, 152.74. Okay, there we go. It's USD JPY. All right, so that's USD JPY. Next one we'll look at is gold. So gold, I'm going to place a buy stop order here. With using the candlestick with the high volume here. So entry at the high of the candle. Low, stop loss, not the low of the candle, but the fractal low slightly below demand number 2. So entry is around 5,085, stop loss 5,012 on gold XAU USD. Right. US oil is still in no man's land, so we'll just need to wait for price to test the supply before moving along. US 500 looks like it's pushing further higher, so I'd rather wait for price to test supply number 2 and look for selling opportunities over there. But for now, no trade. US 30, I want to see something here. Still moving along there. So there is an option here. It's already up 1-to-1. So what can be done is move stops to break even. And you can manage your trades accordingly here. So you can move stops to break even here. NASDAQ. Let's see. There's a potential for a sell here that I can take. The entry on the fractal high here above supply number 1. But the entry needs to be this fractal low, which is the first fractal low of the price bounced off supply number 1 there. So entry at around 25,195 and stop loss 25,322. Okay. Oh, I missed that one. Let me retake it. Okay. Aussie dollar, no. Euro dollar, not giving a clear entry there. Gold, let me see something. Yeah, rather wait for more clearer entry there, but could be looking to buy here. Okay, NZD USD is one to take with stop loss on the low of the candle, and then entry price the high of the candle over there. So entry 0.6057, stop loss 0.6022 on NZD USD. Okay. USD CAD, I see a reversal here. So sell stop order with stop loss on the high of the candle and entry price on the low of the candle with the high volume, giving us an entry here at 1.3562, stop loss 1.3608. Same with dollar Swiss, giving the same opportunity there. But The entry and stop loss, not happy with that, so rather wait for more clearest entry stop loss to sell here. This one's a little bit too big. Dollar yen, we're in now. Gold, we in. Still pending though. Yeah, so those look like most of the orders for today. Okay, perfect. So if I move along to the side here, if you enjoyed today's session, then feel free to scan the QR code that you see there and leave us feedback, as this helps us maintain the quality of the education we provide to our traders. Scan the QR code, leave us a feedback, and that would be gladly appreciated. And if you'd like to contact me, you're more than welcome to send me an email or send me a direct message on WhatsApp, where you can scan any one of the QR codes or follow any one of the links on the screen to get in touch with me, to ask any questions or suggest any future topics in future webinars. Our next trading webinar will be next week, Monday, which will be February the 16th, as we look at a weekly market outlook for the beginning of the week. But other than that, hopefully you enjoyed the session. I will see you guys in the next webinar, which will be next week, Monday, and enjoy the rest of your day and enjoy the rest of your trading week. Bye for now.